Okay, it is streaming. We are good to go.
Okay. All right. Well, welcome everybody to the February Utopia meeting. I know the UIA meeting was held earlier, and I'm assuming we have a quorum to get started. Do we have anybody new or there that I have to introduce? Roger?
Bob Barnhill, is he on?
Yeah,
Yes, I'm here. I'm with Perry City, so taking Todd's spot. So happy to be here.
Welcome. And that was Bob?
Yeah, that's right.
Bob Barnhill. Very
I
good.
should update my name on the screen. I'll do that for you.
Oh, great to have you on. Okay, let's move on to item number 2, approval of minutes, December 12th, 2022. Anybody have any questions or a motion?
I move that we approve those minutes. Matt Dahl.
Okay, thank you, Matt. Do we have a second?
Jeff Lamson will second.
Thank you, Jeff. Any questions or comments on the motion? If not, all in favor of approval of minutes, please say aye.
Aye.
Aye. Anybody opposed? Okay, the minutes are approved for December the 12th, 2022. Let's move on to item number 3, financial audit, FY 2022. I'll turn that over to Jason Roberts.
Thanks, Wayne. Hurry and share my screen and get a presentation up here for you. Just some highlights from the fiscal 2022 audit that I wanted to go over with everybody, talk about some changes we've seen in the past year. Average monthly recurring subscriber revenue increased by 6.8%. Most of this growth is due to what's happening in Idaho Falls. They are growing fairly quickly, and we are seeing more subscribers in Idaho Falls. There are details on that every month in the packet that Roger sends out with the subscriber counts. You can see that, and he'll probably talk about that later. Average recurring network operations revenue increased by 23.9%. This is the revenue that's coming from UIA to Utopia. This is what they're paying for use of the network. And if you'll notice, for the first time this year, we had more revenue come from UIA than we did from Utopia customers. And we expect that to continue to be the case unless something changes significantly at Utopia. We expect most of our revenue to be coming from UIA. The exceptions would be Idaho Falls and Yellowstone, Montana. And we do expect growth to come on the other line from those two projects, definitely. The number of subscribers on the UIA and Utopia combined network has increased by 19%. And we're now at June 30th, we were over 47,000 customers. At December 31st, we're over 50,000 customers. So we're still seeing significant growth. And operating revenue increased by 9.1% from fiscal year 2021 to 2022. And if anybody wants to ask any questions during this presentation, feel free. You'll notice that total assets and liabilities have decreased. This is in Utopia. This historically has been very volatile, what our assets and our liabilities are. And this is due to the swap agreement. And as interest rates go up, what you'll see is our total assets and total liabilities will go down. Luckily, this year we did refinance the swap in fiscal year 2023, not 2022. And so we should see a much more consistent balance sheet in the future going forward. Net position continues to deteriorate, and that's because every time the city makes a bond payment, that's showing up, that's staying as a liability on Utopia's books that we're expecting will be paid back at some point in time, maybe not in the near future, but at some point in time. We do have a very significant amount that has budgeted to come from UIA this year, $4 million to come back towards the city debt. And that's a big increase from what we've seen last year. Here's our 4-year comparison of operating revenues and expenses. I'm very excited to note that for the first time, Utopia had net operating income. Unfortunately, the reason that we had operating income was due to reductions of pension expense because of investment returns in our retirement funds. It's probably not sustainable. I don't think we'll see it again next year. We had an adjustment of about $2 million. And so while I think we would have improved year over year, that kind of makes these numbers more difficult to see the total picture with. And the last thing I wanted to look at here is I just wanted to see what a stress case may look like for Utopia and say, you know, if we're not doing any growth or anything's happening, could we pay for the bonds and the operations that are happening at Utopia just off of the revenue Utopia and UIA have coming to Utopia? And the answer right now, if you look, the bond principal and interest payments were at 15 million and rising 2% each year. Right now, we don't have enough income coming in to pay for the bonds. It looks like we do in fiscal year 22, but that's mainly because of a paper adjustment to our pension expense that didn't actually show up in cash. So it's not necessarily exactly right. And these numbers aren't audited. These are just approximations, but they're within 5%. They're probably most years a pretty good guess when you don't have a big pension adjustment like we did. Any questions? If there are no questions from the board.
Jason, I have a question. Sorry, I was on mute.
Well, that's okay.
Will you go into a little bit more about why you do that and why this stress case is important?
Yeah, for me, the reason the stress case is important is we've had issues in the past where the only way that Utopia and UIA could keep their doors open was to have the cities make cash contributions to the organizations to keep them running. What this is showing here is that while we do need help with the bond principal and interest payments, we do have enough revenue coming in to keep everything running, to keep the personnel going, and to keep the doors open if we weren't paying the debt. And it also shows kind of, is there starting to be some money coming in that could be applied toward debt? Over time, that should show up. So that bottom number, if you look at the 16 million versus the 15 million bond payment up above, as there's some separation in those numbers, hopefully some of the bond payments could be made by UIA or Utopia.
And are you talking about all the debt from the whole system or the debt that the cities are responsible for right now?
This is only the debt of Utopia. This is only a Utopia picture.
Oh, yeah, that's right. I was going to get
if you look at UIA, there's a much more positive cash flow, and that's where we're able to get $4 million. We're able to get $4 million out of UIA to come back to cities. We're not able to get $4 million out of Utopia.
Okay, so then what you're illustrating for us, it really isn't any change in what the situation is currently.
It's not a change, but hopefully over time we do see a change.
And we actually incrementally are getting a little better year to year, right?
We have been historically, and I would say, yes, we are from a cash flow when you look at the whole thing. Yeah.
Okay. And is that a trend you expect? I mean, we're just looking at 21 and 22, but that's a trend you see having happened for the last few years and continuing into the future?
Yes, it is. And we do, as UIA grows and more cash comes in, and frankly, as Yellowstone Fiber and Idaho Falls, they are significant grow, more cash is coming into Utopia, and we're expecting this to start looking better in the future.
Okay. All right. Sounds good. All right. That's all the questions I had. Did anybody else have any questions?
Yeah, Jason, this is Doug Hill. So Keddington and Christensen was the company that did the financial audit for us. Is there anybody online from Keddington and Christensen?
Yes, I'm going to turn the time over to our auditors. They're coming next. I'm sorry. I should have mentioned that. So as soon as there's no more board questions for me, I'm turning the time over to Ben Bailey from Keddington and Christensen. And if there are no more questions, then I'll turn the time over to Ben.
Hey, thanks, Jason. Appreciate the opportunity to present the findings of our audit to the board. So we consider the board to be those who are charged with governance, and which means that you're responsible for overseeing the financial reporting process. And just to remind you that an audit doesn't relieve the board or management of their responsibilities with respect to the financial reporting process. So we audited the financial statements of Utopia for the year ended June 30th, 2020. And we designed our audit to obtain reasonable rather than absolute assurance that the financial statements are free of material misstatement. So if you have a copy of the financials, our opinion starts on page 1. And in the second paragraph, it states that the financial statements of Utopia present fairly in all material respects the financial position of Utopia. So it's a clean opinion. We didn't have any issues with the financials. So our second opinion is, or our second report, I should say, is the report on internal controls, and that's included in the supplementary report package that we have. And basically, we take a look at the cash going in and out, the receipts and disbursements, payroll, financial close process, just to see if there's appropriate controls, but we don't issue an opinion on the effectiveness of the entities or Utopia's controls. And we did not see any issues as we looked at the controls. We performed a walkthrough of transactions, and we kept controls in mind as we audited the details of the financials. But like I said, it wasn't for the purpose of expressing an opinion, and we didn't see any issues. So, and then the next report that we issued was for state compliance. According to the state compliance audit guide by the Utah State Auditor, that's on page 3 of the supplementary reports. And in our test work over this, we did have 2 findings. So the first finding was Utopia has a deficit net position, which it's carried. And state law requires that 5% of the revenue for the year be budgeted to retire that deficit. There was an amount budgeted, but it was short by about $95,000. And this doesn't have anything to do with the financials. This is just state law, what we're required to report to the state auditor. And it seems like it just was missed in the transfer from Laurie to Jason. Similarly, the second finding, the fraud risk assessment, the state auditor just wants us to report whether or not it was done during the year, whether or not management presented that to the board during the year. And it wasn't, and we kind of see that it was due to the change in from Jason replacing Laurie. Again, and this one doesn't have any effect on the numbers, doesn't have any effect on the financials. Just a few other things to go over in the financials. The significant accounting policies and estimates are described in note 1. There was a new standard implemented this year. It's GASB 87 for leases, which we didn't modify our opinion. It seemed like that was implemented just fine. Utopia has a reliable accounting system that produces reliable financial information and has sound accounting policies that have not changed during the year. And the disclosures are neutral, consistent, and clear. We didn't run into any issues during the audit. Working with Jason, working with the staff has always been great, as it has been. And then just one last thing, we take fraud very seriously. We ask fraud questions, we perform analytical procedures, and we keep fraud in mind as we're looking over the financials, and we didn't see any issues there that would need to be reported. So at this point, are there any questions? Okay. Well,
So I have a question. This is Jeff Lamson. So what do we need to do then to become compliant in those areas of concern? I see that we have those listed lower on the agenda. Are those things that we'll be covering or talking about a little bit later in the meeting?
Yeah, we're gonna go over the fraud risk assessment. I just needed to do it. And so we're doing that today, and we're gonna have to do it one other time before the end of the calendar year. So that's one thing. Lori and I just missed on our revenue estimates. They were higher than we thought for last year, and because of that, we had our budget had we had gone too close to the line. I'll probably put a little bit extra in the budget and a budget revision this year to make sure we budget for 5% of revenues to be taken out of to help increase fund balance. And you just have to show that that's budgeted. Historically, we haven't done a very good job of actually realizing that, and there's a chance that may happen in the future. But yeah,
Okay, thank you.
I just got to make sure and change the budget. And you just have to show you can show higher revenue and then show a higher amount as a reduction of fund balance or increase in fund balance, excuse me.
Thank you.
Okay, if there's nothing else for me, appreciate the opportunity you had to present this to the board here.
Okay, thanks very much.
Okay, thank you. See ya.
Okay.
Hey, Wayne, this is Derek. Can I go back to the minutes real quick? I just noticed that on item number 2, it says Tom Peterson from our previous meeting made the motion to approve the minutes from Peterson City. I know Representative Peterson would like Brigham City be named after him, but we probably need to change that to Brigham City. So
Yep.
Okay.
I'll move to amend those minutes and make that change.
All right. Very good. Well, actually, now I'm thinking about that. I'm not sure if that fits within I'm glad to do that. I'm not sure if that fits within the structure of our agenda. Can we do that? Let's have the legal and the Krista thought on that.
Can you say that again, Wayne?
They
If
just
they
want to
go
amend the
back.
minutes because they already accepted the minutes and he just wants to amend them.
Oh, I think you go back, somebody just make a motion to, amend the previous.
So we have the motion. That's not the issue. My question really is, can we even do that now that we already approved the minutes and we don't have a further item on the agenda?
Yeah, I think you're fine with that.
Okay. All right. Then
I'm
we
not
will.
concerned about that at all.
All right. Then we'll take that motion for approval of the minutes back on item number 2. Do we have a second?
So are we putting Derek?
Second.
Okay. Who was that?
That's Jeff Lamson.
Oh, thank you, Jeff. Okay. And Derek Euler made the motion. Good catch, Derek. And all in favor, please say aye.
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 Anybody opposed? All right. Thank you for that. We will go on now to item number 4, election of Utopia board officers. So it is that time of year again. And Roger, I know it has me here as the listed for the item, and I'll conduct that, but would you give us a brief update or just reiteration of how we do this each year and kind of what the standing position is as far as the chair, the first, second, and third chairs, and then we'll proceed from there.
Yeah, so you're free to make a motion for individual seats, whatever. Historically, we've just kind of had a slate where someone would make a motion to say, let's just, have these in the roles. You can keep them the same. You could motion to change them, however you want to do that. Where we're at today is we have Wayne as the chair, Jeff Lamson as first vice chair, Adam Cowie as the second vice chair. Third vice chair is Matt Dahl, and Sharon Morkey is the fourth vice chair. So that's as they stand today. In the UIA one, we had a lot of vacancies because people changed or whatever, but those are all filled today. So it would be okay to do keep it the same type of motion, or we could change. I mean, it's up to you.
All right, very good. Thank
All right.
you. Thank you, Roger. Anybody have any questions to that process?
If I might ask, since I'm new to the board, what's the purpose behind all of the vice chairs there?
They're required as we are set up within our bylaws and with the original setup is Utopia.
So they don't have super specific duties or anything like that. It's just, hey, we have a number of vice chairs.
That's correct. So for my absence, or, you know, we move up the line originally, and this is a good question, Bob, originally, for the first 2 years of the organization, we would rotate those like every year, and we may want to start that again. We got into a time period there where we were trying to finish the system and see some stability to the organization, and that we have therefore kept that slate as it is. I am willing to serve as the chair again for another year, and I'm assuming or hopeful that the rest of the vice chairs will do that as well. And staff has requested that for stability of the system. And like I said, I'm agreeable to do that for one more year, but we could change it as well, whatever the board's preference is.
Thank you.
So, Mr. Chairman, if for anybody's interest, that's located, so the breakdown of the chairs and what their potential duties could or would be, especially if someone higher than their current position is unavailable, is on section 2.9 of the bylaws, which kind of defines that. It's nothing real complicated, and we can probably send out just that particular provision if you'd like to, because sometimes they're difficult to locate at your own organization. So if you'd like to, Mr. Chairman, we'll be happy to send that out to the board members.
I don't personally need it, but if anybody would like to have that, that'd be great. Anybody on the board or on the call would like to see that just for review purposes?
So
Okay.
I'm ready to make I'm ready to make a motion,
Okay,
unless there's any discussion. I would move that we elect the same individuals to serve as chair and vice chairs as served this past year.
thank you, Doug. Okay, we have that
I'll
motion.
second that. This is Zach.
Thank you, Zach. We have a motion by Doug and a second by Zach to keep the slate of leadership in place as it is. I believe this requires a roll call vote. Krista, I'll turn the time to you.
Councilmember Lamson,
Aye.
Adam Cowie,
Aye.
Matt Dahl,
Yes.
Mark Christensen,
Aye.
Doug Hill,
Yes.
Councilmember Bloxham,
Yes.
Jason Sand,
Yes.
Bob Barnhill,
Yes.
and Wayne Kyle.
Yes.
Unanimous.
Okay, I believe that's unanimous. Sorry for the pregnant pause. I was kind of hoping Krista was going to have some commentary there for us.
All right, I said it was unanimous. You didn't hear me, sorry.
Oh, sorry. Yes, I just didn't hear. All right. Thanks, everybody, and look forward to another year, good and productive year here at Utopia. We've seen huge success in the last 2 years, especially under the guidance of our executive director and our staff. They've done a fine job. I'd like to compliment them for that. And I also would actually like to thank all the board participation that we have as well. So with that, let's move on to item number 6. Jason, the Utopia financial update. Oh, sorry. Whoop. Item number 5, discussion of Utopia's fraud risk assessment.
Yes. As we heard, one of our findings is the fraud risk assessment does need to be presented to the board annually, and that's what I'm doing right now. We'll do it one other time before the end of the calendar year. The risk levels that are shown on this fraud risk assessment go very low, low, moderate, high, very high, with very low being the best and very high being the worst. Right now, Utopia is in the low category. Although with some very small changes, we could be in the very low if that's, as we work on that, there is that opportunity. There are some things like we could do, like as we were going through the procurement policy, I did show that we had a purchasing policy that included purchasing cards. These policies have to be adopted by the governing body to be included on this list. So that's a change that we can make. It'd be very easy to put a fraud hotline in place that we haven't had in place. I've heard all you need to do is go to your website and put a link to the state fraud hotline and do that. There's a chance that's on there and I just didn't know about it. But right now I don't have that checked. By next year, I hope to have that one checked. And then, yeah, the things on there we could very easily change and get to the very low very quickly. Any questions from the board about the fraud risk assessment?
No questions from the board. Is everybody familiar with this function? I know those that have been with their cities for quite a while have been. For you that might be a little bit newer, you might not. You sure we don't have any questions? All right, very good. Well, we will move on then to the next item. Thank you, James, for that. And let's go to the financial update.
Okay, I'm just calling that up really quickly here. There we go. And we share that. Okay. This is an update from December 30th of 2022. I do notice there is a typo on this. I should have caught the period ended that says 11/30/2021 is 12/31/2021. That is I did change those numbers. I forgot to change the header. What we're showing here is just the difference between the prior year and the current year for the 6-month period ended December 31st, 2022 and 21. And then we project out June, the fiscal year end for 2023 and compare that to budget. If we look at this, the residential and commercial transport numbers for revenue are falling. They are a little bit behind.
Jason, can you zoom in on that a little bit?
Yes.
Thank you. That's better.
That's better. Thank you. Sorry about that. We are seeing revenue growth in Utopia right now. And if you look at the residential and commercial transport, they are falling a little bit behind where we were behind where we think they need to be for the end of the year. This is kind of expected to some degree because our revenues are increasing quickly for Utopia and UIA. So definitely the amount of revenue we see the first half of the year is usually significantly less than the revenue we see for the second half of the year. I think we're going to be very close to budget for the residential and commercial transport lines. I think most of that will be made up the second half of the year. The access fees for bandwidth and fiber lease, though, those are the ones that are coming from and network operations revenue and overhead. The network's operations revenue, that's also falling a little bit behind, but that I project to be ahead of what we expect to be. Overall, I think revenues are on track to be very close to budget. As we expect the second half of the year to be stronger than the first half of the year at Utopia, and historically that's always how it happened. If you look at expenses, right now we are projecting expenses to be slightly higher than what is in budget for the end of the year. Part of this is because with our relationships with Idaho Falls and Yellowstone Fiber, we have been selling some materials to them to help them with the build out of their network as they can't find materials, and we do have them in stock. I didn't have all of that budgeted, and most of that's in the professional. If you look in the professional services line, we're going to need to do a budget adjustment to adjust for that. But if you look at net operating revenue for the year, we do expect it to be very close to we expect that the net to be close to what was budgeted. So that's a good thing. And I think we're on track to be roughly on budget at the end of the year. Also going to show our financial charts and our revenue charts. I'll make this a little bigger too. So this is combined, the green lines combined Utopia and UIA revenue, getting very close to $3.5 million per month recurring revenue, and that's a very, very good thing. If we compare that and this is for UIA, but I know it's very applicable to Utopia. We can see this red line here, the last line at the top on the right, that is for the West Haven bonds, the last ones that were issued. The blue line above that is total revenue. The gap between the revenue needed to pay off the bonds and the monthly revenue coming into UIA is near its all-time high right now. And that's even with a new bond coming on. So financial results are still good and revenue is still very good coming into UIA and Utopia. Any questions for the board on the financials?
Hey, Jason, Doug, again, I do have a question that stems back to the financial audit. You made mention that all of these cities that have bond obligations end up showing on Utopia's financial statement. My question is what happens if any of these cities fail to make their bond payment for any reason? Who then becomes responsible for making that bond payment?
If they fail to make the bond payment, there are remedies available to Utopia to go and intercept their tax revenues that they use. And we have another method to get the revenues for making the payment. Is that correct?
Let me ask a question to that too, Doug. You were asking about the newer, the UIA type bonds, or all of ours from the older ones, or which ones particularly? Sorry, I missed that at the beginning.
Yeah, those cities that are not part of the original bonds.
Got it.
Okay.
Yeah.
Okay. So yes, to Jason's response, that's correct. But I also, to my understanding, and Jason and Roger, you can both confirm this, even if we were not able to collect the tax on that, we're still not legally responsible for those bond payments, right? Those cities are.
Yeah, so the cities have made a pledge, a revenue pledge on the city-specific projects where UIA holds the debt. There's some other ones where they've done their own bonds or other financing, and that's just kind of, we're not on the hook in any form on that. Like Bozeman, for example, we don't have any obligation towards the debt there. They have that obligation. So in most cases, sales tax has been used. That was all the original Utopia bonds. So sales tax could be intercepted to make those bond payments. But the city partner projects have been franchise tax primarily, and a little bit of sales tax on the newer ones. But they're dollar for dollar, the debt service is guaranteed with a pledge of tax revenues. So yeah, there's definitely a course to go and get that money from cities if needed. Fortunately, we're not looking like we're going to need that for any of these projects, but it's good for the Utopia cities to understand that they're protected from it.
Yeah. So whichever version applies, whether they bond themselves or whether they just pledge their sales tax, it's still coming back to them.
Yeah, and Wayne, that's true. What is true is we can get a sales tax pledge. We can get those revenues regardless of what the cities want. I think technically on the UIA bonds, though, if the sales tax, if the tax pledge revenues are not received for some reason, then they could come back to UIA. That's very, very unlikely, and we see that as a low risk component with the tax pledges being there, because those can be used whether the city likes it or not on that. But technically they are UIA bonds.
Yeah, okay. That is actually the point I was wanting to make clear. Some of them are actually UIA bonds. They just have the sales tax pledged against them.
Yes, and that's the city partnerships with UIA, not the Utopia cities, which are different.
Okay. Good question, Doug. Did you have any follow-up to that?
Well, no, I appreciate knowing that. Thank you. But maybe a question, again, just because of my lack of experience with Utopia is, there are some cities out there, I'm not sure which ones, but I've heard them talked about that that don't really have bond payments, but are paying UIA or Utopia to administer their fiber. For example, I've heard talk of this California entity. Maybe we're not far enough down the road on that to be receiving anything from them. And maybe others can I get just an explanation about how that is structured?
Yeah, great.
So the first one was Woodland Hills, and Woodland Hills essentially wrote a check for the entire cost of their project. There was actually no debt, either theirs or ours. They just had a fund that they accumulated over time. If you look at it on a per household basis, they paid more per household than any Utopia city has, but they had the money and they paid for the project up front. The next one under that sort of a model where there was no debt issuance was Idaho Falls, and they have done their own financing for that. Again, I think that came out of a fund versus any new issuance of debt. But again, Utopia or UIA have no obligations into how they've come up with money to pay for those projects, but we have an operating relationship where we do get money for every customer in those systems. The next one was Bozeman, which is now Yellowstone Fiber. The following one there has been, you mentioned RCRC. RCRC doesn't have any projects yet, so the intent is that it would probably be like that. And then I haven't brought it up in this meeting yet. I was going to later, but Bountiful has essentially awarded us an agreement, but we were still negotiating that agreement. But that would be a similar model where they would pay for their network however they see to have it paid for. But we would essentially come in as an operating partner and have money coming in for every subscriber on the system. In some ways, it's much more favorable for us because it's all upside. We have no debt. We just make money from those partnerships. And so we're not opposed to them. With UIA, we're a little bit more of an investment position with those networks, although they have all worked out very nicely financially. So does that help answer those? It looks like we got a hand raised on our list. Did you want to speak to that?
Yeah, just one thing that may be worth clarifying. UIA has what I refer to as regular UIA debt. Now, you won't see that in the bond documents. So there's debt that UIA has issued, and then there, sort of that it's responsible for on its own. And then there are the partner city pieces. The partner city pieces have all been structured as has been described, that if there's not one penny of revenue, then the city pledges come into play, and that would pay those UIA partner debts. What I've referred to as the regular UIA debt is the original bonds that you member cities authorized and have issued. And then we have, you have authorized and issue additional bonds, regular UIA bonds that don't have any backstop. So right now, roughly about 35% of the debt service for the regular UIA bonds could be covered by franchise fees. If there's like not one penny of revenue, the other, the balance of that, the 65% of that, the bondholders are entirely dependent upon the system revenues. So if, and again, no one's predicting this, but in, some sort of catastrophic situation and there wasn't one penny of revenue on the regular UIA debt, then the only thing the cities have pledged is to pay right now roughly that 35%. So whatever your pledge agreement states when UIA was formed, that is what the city would be responsible for. But again, that would assume that there's no revenues.
And if you look on this chart that I have up, that's all of this lines that say series and don't have a city name, that's UIA debt issued on UIA's credit based on their revenue position.
But the operating partnerships are UTOPIA partnerships, not UIA partnerships. So those ones that like the potential RCRC project or Idaho Falls, Bozeman, Bountiful, those aren't new revenues at UIA, those are new revenues at UTOPIA. And if it weren't for, like, go to the previous chart, Jason, if it weren't for how great that revenue chart were with UIA, it was just charting of UTOPIA revenues, that blue line would look great, right? It's gone up significantly. You say, where's that money coming from? Some of it is that there's the agreement between UTOPIA and UIA for UTOPIA to be operating the customers for UTOPIA or UIA, but UTOPIA is also operating customers for city-owned networks or independent networks like Idaho Falls, and that's been a really good financial benefit to UTOPIA, which is going to get much bigger. We're still not even done seeing the benefit of Idaho Falls, and Bozeman is a similarly sized network. And for context, Idaho Falls is very quickly becoming the third biggest subscriber network of all of our cities. So it is a significant source of revenue for us, and will continue to be that as Bozeman and some of these other networks get built out.
So Roger, is there anything to prevent Idaho Falls from saying in the future, oh, we can do this cheaper than what we're paying UTOPIA to do it, and start doing it on their own?
They could. They have that option. We've tried to make sure that we maintain a good relationship with them. Their concern has been on the other side, thinking, is there a point where UTOPIA doesn't like the relationship and might abandon them? Because they worry that we're not, we could walk away from the agreement at any time as well. They've suggested a form of membership at UTOPIA. They're members of UAMPS, and they've said, well, is there a way for us to feel like we're a little bit more connected than just an operating agreement? We've not come up with a specific proposal for that, but I know they've kind of come back and asked us for it several times. We do have some types of partner or city membership tiers, we've considered where it wouldn't dilute the ability of the original UTOPIA members to vote on the things that they care about. It would allow for some participation so they feel more like a member to the organization versus just a client. So those are some things we want to work towards to see if we can resolve both, meaning we maintain that relationship because financially it is fantastic for us, but they are also to some extent concerned that we could walk. Their concerns make us feel pretty comfortable in the arrangement because they are happy and wanting to have a longer relationship concreted with us versus looking for avenues to leave. But they do have that option back to your question. It's not a long-term agreement. I think in Bozeman, we do have a longer-term agreement. I remember, remember what the term is? I think it's like 10 years.
Yeah, I don't know, but we've taken that into account and we drafted the RC.
Yeah, with RCRC, I think we would nail down a longer term.
Yeah.
Bountiful, we're in negotiations right now with that one still, so probably put a longer term there. Is that a new hand from Laura, or is that your old hand? I see your hand raised. Might be your old hand. Does that answer your question, or have any other details you want on those? I do think the future of UTOPIA is going to have more and more of these. So we're getting approached by more and more cities that are interested in owning their own network. And in many ways, we're doing them a really big favor when we finance the project under UIA. If they want us to just be an operating partner, we do charge a premium. It's different pricing structure, and we do make good money from an operating partnership as opposed to a UIA-owned network. So if that's the way they want it, that's great for us financially. And I think we're probably going to see more of those because those cities, there's been a lot of selling by competitors of the idea that you're better off owning your own network. What that means, so from our perspective, is you also have to pay for your own network. and we can come up with a price structure that's very favorable for us that still lets them check those boxes. We don't end up holding the debt on our books. They do their own financing, and we still benefit from economy of scale and revenue growth. At the end of the day, if I were to be completely honest with cities looking at options, I would think that the UIA model is actually favorable. But some of those points of ownership are politically important to them. So they want to pay for their network and pay us to operate it for them. It's still a good model for us.
Okay, sorry for taking everyone's time, but thank you for the explanation.
Oh, that's great. Great questions, Doug. Appreciate it when you bring that input. I know this is a very complicated structure, especially between Utopia and UIA. So it's good to be reminded, and it's good to be going over the details, even if we do it repeatedly. As a famous person, not necessarily famous, but famous to me, once said, you know, it takes 5 times for any of us to remember anything, and that's the geniuses. So that's a motto I try to live by. Okay. Man, I forgot where we were at. Oh, we're still in the financial report. Okay, Jason, did you have anything else on that?
That's all I had.
All right, then, Roger, you kind of gave a little bit of a network update, but that would be your show now. Let's go to your item.
I'm gonna share here. You should have all gotten the subscriber report, and it didn't flip here. This is still showing. Let's try this again. Okay, I think it came up that time. Except it says February or January. That's the wrong one.
Nope.
Mine shows February. It's interesting. Multiple is up on the screen. February, and it shows January. It's the weirdest things. Well, I don't know, am I sure? I'm gonna just share my desktop then. I can be sure I know what I'm looking at. There we go, February. So anyways, I sent this out. If you didn't get this, please email me to make sure you get on my distribution list for the subscriber reports. There's a few interesting milestones that we've hit over the last few months. One of those is we've noted that we moved Orem into the completed build-out cities. That is the last of the original cities. So we are officially done with the build-out. We're not putting a lot of attention to that because it's been a long road and a long time. So from a marketing perspective, we're like, yes, it's great. We're happy internally. But yeah, it's been a long road. For those who've been involved, you understand the difficulty it's been getting there. And this is a big accomplishment to be proud of. But, you know, just from a calendar perspective, it's been many years. So anyways, that's exciting. We broke 50,000 subscribers, so we're blowing past that already. The last report had us at 52,341. We're adding 600 to 800-ish net growth every month, so we'll be hitting 53,000 shortly, maybe by the next month's report or shortly after that trend continues. We don't believe it would change. Things are going really well. In fact, we've got a lot of new area coming online in Pleasant Grove and Syracuse. So we expect to see a nice little bump in our rate of growth. We've continued to see take rates going up in every city. So while we get asked all the time, you know, what are the competitor options looking like? We do see announcements of, hey, now we've got multi-gig offerings. We've got, you know, these upgrades and other things, but the reality is we're continuing to see more customers switching over to Utopia in all of our cities. Occasionally we'll see a little blimp here. We saw Linden drop just a couple customers, and then we saw a bunch more come on in this last month. So we're like, oh shoot, okay, we can still, see that we're growing our customer base both from numbers and from take rate in all of our cities. So that's good. We've not raised our rates, as you know, in many years, and we continue to hope to maintain a low price structure while everybody else continues to pump their prices up. And we're able to do that while also improving financially overall, mostly through growth and economy of scale. So, that it is possible we'll have higher price points in new partner cities because the costs are higher and the capital cost and the financing of that, but our operating costs continue to get more and more efficient here at Utopia as we grow our customers and have not significantly grown our overhead. I mean, obviously, we do have to do pay increases and there's been inflationary pressures and we have increased headcount and we'll continue to do that. But all of those things haven't nearly been at the rate that our revenue growth has been. So we've been able to get better financially over that time. We did also get a recent award from the Utah Education and Telehealth Network. They did an RFP. They do one each year for some number of schools. Sometimes it's bigger, sometimes it's smaller. This was a decent size bid for them, and we were the #2 winner in that, just behind CenturyLink. Got more sites than us, but they cover far more schools and cities than we do. So to be #2, we were very excited about that. That's about 90 circuits that we were awarded, which is a lot. And so there'll be a lot of construction out to new school connections and upgrades, especially well with Granite School District, which is historically we've not done well with for various reasons. I think they just had a preference for leaving everything alone. So it's always a difficult thing to go in there and steal away a connection. So that was very exciting to get that win. That's going to be some of the spend from Utopia. A lot of the stuff we do is over on the UIA side of things, but with the refinance of the Utopia bonds, we were able to come out of that with some savings that we said we would be reinvesting. And so a portion of that will be to build connections to schools, but then Utopia will have the revenue from that, which is a better thing for us, but financially in the long term. So those are some exciting things that have happened. I did make mention of the Bountiful Award. So there's still a negotiation to finalize the contract for that city partnership, but that'll be a Utopia partnership, not a UIA partnership. So similar to how we've seen significant revenue growth from Idaho Falls, Bountiful would come in under Utopia. It'll take a few years though, so that they come slowly. We ink a deal and then we have to, design it and build it and then get customers. So if you look at our subscribers by city, if I come in here with a little more detail, you can see Idaho Falls is very quickly becoming the, not quite there, but next month probably the 3rd largest city. Bozeman is a similar size city, so we expect Bozeman to come on strong over this next year and grow similarly. And then we have Bountiful coming in behind that. Potentially some projects in California related to RCRC. And we're in discussions with several other cities, both inside of Utah and outside of Utah. So we do think there's a big future for Utopia to continue to grow through these partnerships. We think there will be additional UIA partnerships where UIA does the financing. Through all of that, again, we just want to continue to benefit more and more communities. And if there's financial benefit, which all of these have been structured so that they would, that can come back to help relieve some of the financial burden at Utopia on the bonds, which is fair. We're able to strike the right balance, we feel, of benefiting new communities while also benefiting the original cities, right? It's kind of the delicate balance that we strike in these deals. And we've been able to do that where we come across as the best option for those cities with our price points, but also at a price point where we make money and the city benefits and we benefit. So anyways, that's my update. I don't know what else. Do you guys have any questions on the subscriber report? any of these partnerships out there. Things all look very favorable for our future, and we expect to continue to just add more and more of these partnerships and growing the network. There was a question that came up on the other meeting about what about the other stuff that's not fiber to the home? How are those going? And we are a preferred option for the state of Utah, and we provide benefit to other governmentals, like the state, various counties are using us. We're wrapping up the build out of connectivity to Weber County's locations. So Weber County is using us as their fiber backbone. We have several counties that use us. Obviously, the school system uses us significantly. Businesses across the state use us. So this isn't just a bunch of fiber to the home projects. It's a kind of a, I'd say statewide, except really it's Wasatch Front and Wasatch Back. We're not out into like southeast Utah. There's still some parts of Utah, but the mostly populated areas of Utah, including even the St. George area, Cache County, have significant growth with Utopia in those areas.
Other questions from the board? Good report, Roger. Making sure I wasn't on mute there.
Good.
Okay. I did think it was good news as I've worked with Roger over the last couple of months. This potential that we have with Bountiful, like I'll just mention that real quickly. And it's not a for sure thing yet, but it does look like it could be a very positive thing for Utopia and of course the citizens of Bountiful as well. So congratulations on that. Not to be premature, Roger. Any other questions from the board? If not, we are on the last item on the agenda to adjourn. Do we have a motion to adjourn?
So moved. This is Adam.
Thank you very much, Adam. Do you have a second?
Second, this is Jeff.
Thank you, Jeff. All in favor of adjourning, please say aye. Aye.
Aye.
Aye.
And I look forward to seeing you all next month. Thanks very much. Talk to you later. Bye.
Thanks,
Yeah.
Wayne.